more mortgage information than you ever wanted to know.
I'm good at it because again, like I want to start educating my clients a bit, and also, you know, I've referred a few people to you over the years, and it's nice to start building that bond. And
Yes.
right, because some people who are watching me, they're like, hey, I'm
Don't know. And I never meet them unless they should book a Google Meet. So this is nice. They get to see my face.
right.
Yeah.
And so one thing, now I don't know if you use or not, I know there's a system now that people can upload their documents to the system. Like it used to be send me an email. Now you guys have one main portal that they can upload the documents to.
Yeah.
Is that correct?
Exactly, 100%. It's the same portal they do their online application on. I go back in and I list all the conditions specific for them, and they can upload their documents to me. And then most of our lenders are on with this now. So they have secure portals we upload the documents to as well, just to protect everybody.
What do you love? What are you passionate about?
And am I passionate about? Honestly, same. Like I like educating. And now that I'm thinking about like my kids and the next generation, like my son, who's grade 8, I'm like, do you want to start working part-time with me? I'm learning about it. And so he's very entrepreneurial as well. So I love that. I love helping my kids and having the schedule of my kids. I used to work downtown. So being on the GO train for 14 years, I missed a lot, right? And you'd leave at 7 in the morning and get home at 6 at night. Well, now I literally work 2 minutes from the kids' school. So that's my number one, is having a flexible schedule to be there for the kids. And number 2 is educating as much as I can, because it's not just, you know, you walk into the bank and you get approved. It's more than that.
Absolutely. And that's why I was asking you, like, how do you recommend which mortgage? Do you ask the client what their long-term goals are and what their short-term goals are?
Yeah.
So 100%.
Yeah.
Okay. So you said you had some things that people ask you all the time. So Hannah, what does a mortgage agent typically charge, or is there a fee? And what are the myths associated with the answer to whatever you're going to give me?
Love it. Your mortgage agent should not be charging a fee. There you go. I said it. No, typically, most of our lenders pay us a commission for bringing them new business, much like the mobile advisor at the bank. They get a commission when your mortgage closes, us as well. The only exception to that is when we need private lending. The private lenders do not pay us a commission, so we charge a fee. It should be disclosed and upfront, and it should not change when you get to the lawyer's office. If there's any problems, call me, and I will take care of you. As far as myths, should we get into myths? I want to talk about the 5% down for sure.
Yeah.
Or can buying like cottages. They don't realize that they don't have to have that 20% down. Yeah. That's another big one I was thinking of when you text me on to that's left me.
So if someone's not a first-time buyer, or if they're buying a cottage, a recreational property, a second property that's not their primary residence, do they need a certain amount down?
Great question. I get this all the time, and so I'm going to clear the air. If you own a home already and you're buying a cottage, you only need 5% down. A lot of people think they need to save 20%. They don't. 5% we can use for a second home.
Interesting. Okay.
Yeah. If you're buying a second home for a family member, like a parent or a child to live in, and we don't need rental income or anything, you only need 5% down. So if you've got someone going away to school or a parent that needs help with a home. And the third thing is a full-on investment property. If you're buying a rental, you're renting it to a tenant, you're going to have rental income. That's the only case really needs 20% down. If you owned a home in a previous life 10 years ago and you're getting back in the market, you can buy a home with 5% down. As long as you live in it, it's a cottage or it's for a family member, you only need 5% down.
Okay. So if, for instance, my daughter, she's away at university, and if I wanted to buy a property for her to live in while she was there, even though it's secondary property, what would my down payment have to include?
5%. That's it.
Wonderful.
Yeah, it's great for all those parents who have kids in university, right?
Mine rents, but you get it. Okay. So, why is it that you only need 5% down? Like if I'm buying an investment property, say I live in a Durham region and I'm buying an investment property to rent out in Durham region, and my kid's not living there, my family member's not living there, why do you then need 20% down?
Yeah, it's a great question. So it goes back to those mortgage default insurance rules. So when we have less than 20% down, we have to qualify for mortgage default insurance. CMHC set their mandate to be helping Canadians buy homes. So that's your first home, your cottage, a home for a family member. That is not rentals. So as soon as we say rental, it's 20% down. It's not covered by mortgage default insurance anymore.
Fantastic information. I'm sure a ton of people are going to be very, very happy to hear this. So, Hannah, is it true Or is it a myth that if you have a debt, you can't buy a home?
That is a myth. So it's a numbers game. It depends how much the monthly debt payment is, not the payment they're actually paying, but the payment I have to use with the lender, and how much their income is. So when I've got all their documents in, their income, their down payment, and their credit report, I look at, perhaps if we shifted 10 grand from the down payment to pay off debt, what does that do for their buying power? It takes us back, I think, to our main mission, which is education and providing options. I want them involved in the buying process. So if they know they can get, a larger home with paying off a little debt, and this is what it looks like, that might be the option they choose. They might not, but they're making an informed decision in that case.
Do you ever have clients come to you? They seem secure. So they have, a secure job, very little debt, but they still might have struggles obtaining the type of home and the cost that they want. Will you set out a plan of action for them, like maybe a 1 or 2 year plan, so that they can eventually achieve what they need to be able to move into the home?
Yes, I love that. And I joke, I love the clients that walk in today and buy a home tomorrow. Don't get me wrong. But my favorite part is those clients, I'm holding their hand and walking with them for a year or two. Now, with rates how they are and government regulations how they are, it might be a moving target, but having those check-ins every 6 months, we set a debt payoff goal or a savings goal or a career goal, and we're checking in. When they finally get that win, it makes it so much greater. So I'm happy to help with that. Yeah.
Thank you so much for all of your time and your information, as always.
Thanks for having me, Christine.
So Hannah, it's unfortunate, but I've helped many clients who are parting ways. So they come into the situation where they need to sell their home and plan or prepare for their next step. How would you help people prepare or navigate, or how soon in advance of us actually starting the home sale process would you recommend that they check in with you to get the advice they need to move forward?
In this case, it's never too early. Actually, even before they finalize the separation agreement, we can start the conversations. Now, all of the lenders are going to need that separation agreement for a number of reasons. Are they paying or receiving child or spousal support? How will the matrimonial home be split? In some cases, I've seen where one ex-spouse stays on title for a few years, which may hinder us buying the next home. So we need to see that paperwork eventually, but we can start the conversation sooner and start all the plans and running numbers for that, so they know how this decision impacts their buying power. What if I go this way? That impacts your buying power. So we can have that chat as soon as possible.
So Hannah, if you have a couple going through a separation, they're parting ways, and they need to sell their primary residence, and you chat with them about getting pre-approval to move on to their next property, but they don't have the funds because they're tied up in the home to put down a deposit. Is there any recommendations or ways to help them navigate that situation?
Yes, 100%. So, this is true of many clients. Most of their savings is in the home. Most of their equity is in the home. But doubly true of when we're separating and maybe timelines are off or different. So this is another advantage of coming to a mortgage broker, because we'll see who their first lender is, if we can do anything with that bank. If not, we'll explore second options from the cheapest to, unfortunately, private scenarios, but we can lay them all out on the table. That might help with the timing of the sale. That might help time the new purchase, just so they're making that decision fully informed, not making a decision and then suffering the financial consequences, right? We can make that part of our plan.
Right.
Yeah.
Right. Thank you. You're welcome. These are so many amazing tips that you're providing for myself and my clients and your clients. So thank you again.
You're welcome. I'm happy to help.
I do have another question. If somebody wanted to connect with you, I know you mentioned that your initial call was a discovery call, which is a fantastic way to phrase it. How long does that discovery call usually take before you decide whether you're going to work together moving forward in the future?
Yeah, great question. So that initial discovery call is 30 minutes. So in that time, they're asking me the questions to make sure I'm someone they can know, like, and trust. I'm asking them, key mortgage, income, credit questions to make sure they're someone I can help with my suite of lenders. That's about 30 minutes, and we do those now on Google Meet or on the telephone.
Excellent.